Good evening, everybody. Kamari Ellis here. You're watching the Finance Rebel Show. I am the Finance Rebel. The Finance Rebel Show is all about increasing your financial IQ. And today is our Ask Kamari segment where I answer your questions live right here on the spot. I already have a couple of questions already queued up in the queue, and we will talk about them as well. But let me go ahead and share this out. Now, I'm running a few minutes late because I was supposed to be on at 7. I've been getting some client calls and handling some work, but I got to get off here probably by about 7:55-ish. I got to do a radio interview. Everybody is interested and curious about today's Fed movement, the $1.5 trillion stimulus that the Fed put into play today. So I guess people want to talk to me. That's always a good thing, right? That's always a good thing. Talking's good. Talking's good. But as you can see, market got killed again today. I told y'all the market's going to be crazy over these next couple of weeks, days, maybe even months. But I don't expect anything to really pull up. Corona is still spreading. We're getting some new that Corona is still spreading. To top it all, we're starting to see more activity jump off in the Middle East with Iraq. Supposedly there was an attack on a U.S. base last night. I believe it killed 2 people, and many other people are believed to be backed by Iran. I don't believe any of that war stuff, but I just feel like it's very sloppy. It's very bad. So excuse me for that. But anytime you have a storm, it's the market. Oil's still dropping, right? We see Russia and Saudi Arabia. I don't want to say doing a coordinated dump on oil. Some people are saying that they're having a price war. I don't really think it's that. I think it's other things that are going on behind the scenes that nobody's really talking about. But a lot of people are seeing that, and oil's dropping drastically. From a consumer perspective, however, it actually throws a lot of things off from an economic standpoint. So again, I'm gonna be really interested to see what many of these developments are. But we saw again everything fall out today, a lot of stuff. But again, as I said, and will continue to say, stay calm, drink your water, keep investing, pick your spots, right? You can never time the market. You never know when the market is going to bottom out. You never know when the market is going to top out. Here's the thing. Again, I only talk to long-term investors. I'm not for traders. I'm not for people who are looking to get rich quick, like overnight or in a month, because 9 times out of 10 it doesn't work. But sadly, since a lot of people don't understand the markets and kind of are afraid of the markets, they think that's what it's about. That's actually going to be one of the questions today. But again, I need a favor from somebody out there. Hey, Kelly. Hey, Brandon. Hey, Panda. Need a favor from one of y'all. I got to get off at like 7:55. I have to do a radio interview talking about this $1.5 trillion stimulus that came out of the Fed today, which is very interesting. Very interesting. I say they should have did that cut last week, and instead of doing that, they should have done the stimulus last week, the 1.5 trillion, instead of, I don't have my microphone. Instead of, can y'all hear me better now? Instead of doing the 50% or 50 basis point cut. Hey, Scott. Scott asked, how's the market on brown liquor? I don't think the market's on brown liquor right now. I think the market's on that opiate. It's in stupor right now. It's getting smacked up. Doesn't know where it's at. So, Lucky just said, correct, oil, gold moves the market. Some people love gold. I'm really not the gold guy. I think gold is overhyped. I know gold has been damn near an all-time high since the highs it reached, I want to say, in like 10 or 11, 10 or 11. People tend to go to what they call safe haven assets. Gold is safe haven assets. U.S. Treasury bonds are safe haven asset. The Japanese yen is a safe haven asset. All of these things are safe haven assets because all of these things are pretty stable. The Japanese government is pretty stable. Chris Patton, you wasn't on yesterday. I talked about a watch list. I'm building a watch list. Chris asked, how is his portfolio? Or do I have his portfolio yet? So I did a watch list yesterday. He wasn't here. But, again, talking about safe haven assets, U.S. Treasuries, that's why we're seeing bond levels so low right now, because bonds have actually increased in price. Anybody that has been invested in bonds, the 10-year has gone down, and so it's increasing in price. People don't realize a lot of times that as bond yields go down, their price goes up. It's the exact opposite of the stock market. But got a couple questions. Let's start off. This was the fun one for me today. All right, so this was a comment. It's not even a question, it's a comment, but I really want to address it. The comment was, to make money, you need to put in big money. Small money gets you crumbs. And that's talking about the stock market. And that was one of my IG comments today on one of my posts. And so they were basically talking about how I'm suggesting to people that just to get started investing, you only need $1. You only need $1 to get started. Now, some people think or used to think that you needed a whole bunch of money. You need to be already rich to be in the market. That is very much a misnomer. It's actually been a misnomer for a long time. I mean, 10 years ago, you only needed $500 to, let's say, get into what's called a mutual fund, which is just a basket of different investments, whether it be gold, whether it be stocks, whether it be bonds. That's all you needed a lot of times to get going. So that wasn't a whole lot of money. But now, again, with the advent of technology, and I've been kind of saying the same thing over and over again, if you just put in $1, you can start investing. And I'm actually kind of proud of myself that I've been getting inboxes and text messages and DMs of people buying their first pieces of stock, right? Because I want y'all to think about it like this. Every dollar is a good dollar. Every dollar is an important dollar, right? If every day you go to Starbucks and you spend $3 at Starbucks, right? And you go there every day, that's $15 a week. Now, Starbucks, we know, probably more like $4 or $5. So then we're talking about $25 a week. Well, you're never going to get that money back. And that temporary satisfaction that you got from drinking your coffee or your latte or your espresso or your honey bun or whatever you got from there is very temporary. However, you could take that same $25 that you spent at Starbucks that week and buy a portion of Starbucks stock. And then with that, stocks tend to go up over time if they're good companies, right? Remember, I always say, don't think of it as buying a stock. Think of it as buying a piece of a company. So you're buying a piece of a company when you're buying Starbucks. You're investing in yourself. You're now a business owner. Many people don't recognize that, but you are. So now you have a chance to do something with your money. And then so as Starbucks rises, as Starbucks does more business, as Starbucks is profitable, you get to participate in their profitability. Now, I don't always want to sell sunshine without talking about the rain. Starbucks could actually go down in price too. Starbucks could start losing customers. Starbucks could be slow to the party and somebody else may come in and take their spot. But it doesn't look like that right now. So right now it's a good bet, but nothing stays the same over time. So, again, instead of wasting your money on depreciating assets, going out to eat, buying cars, buying jewelry, buying clothing, you can then take that $25, that $50, that $1 and invest it into the market, invest it in yourself ultimately. Because again, it's the gift that keeps on giving. Give you another example. Everybody knows I do the Robinhood, and I'm a Robinhood affiliate. And when you use my link, you get a free share of stock, and I get a free share of stock. Well, today, somebody used my affiliate. I got a company called Marathon Oil. Trades at like $4.50. Guess what? It also pays like a 4% dividend. Now, what I paid for that was my time in coming here and spending time with you guys, and somebody trusted me enough to click my link. But now I'm going to get a dividend, a 4% dividend. It's like 20 cents, right? Now, you might laugh and say, hey, it's only 20 cents. But 20 cents begins to add up. And if I choose to start buying more, because I've actually been thinking about it, that dividend will continue to increase. So now I'm getting money, right, from holding the stock, right? I'm getting paid out. That's the price you get, the dividend. They pay you out a portion of the profits or the money that the company has. And now if other people find it attractive, I then get to participate in the appreciation of the stock price. So it's twofold. It's twofold. Again, they're making money, several billion-dollar company. Actually, if anybody was on last night, and I went over the stocks that I found sexy to start adding to my watch list, it does well. It's doing well. I'm trying to find it now. Marathon is a $3.7 billion company. Now, it made my screen, but at the time, I didn't think it was super duper sexy. So I'm not adding it to my watch list, but that might just change my mind. That might just change my mind. All right, so let's see what questions we have here. So say, Eddie Kelly, what is it? What is it? It's a watch list, a stock market watch list. Stocks that I'm watching to see if I'm going to be interested in having. So what I'm going to do, Chris, what I'll do is anybody that wants my watch list as I build it out, send me your email, put it in my inbox, and I'll add it to my list. And when it's, I'll update you as I'm building it out. So just send me your email to my inbox or my DM. For dividend investing, what's your thoughts on dividend ETFs? I think they work. They work just fine. ETFs are wonderful, in my opinion. ETFs are the cousin of mutual funds, right? So it's a basket. You definitely get more alternative investments with ETFs versus mutual funds. You get more specialized things, typically in ETFs. By the way, ETF stands for Exchange Traded Fund. Exchange Traded Fund. That's a good question. I got a question on IG that I definitely want to talk about. So yeah, a lot of them are good. A lot of the dividend ETFs. I have one that's my favorite off the top of the list. Again, this show is for educational and entertainment purposes only. Past performance of an investment is not indicator of future results. All right. So what that means is just because something did good in the past does not mean it will continue to do good in the future. Any investment is subject to risk. Any investment can be subject to losing all your money. Before you make any investment decisions, talk to your investment and tax advisor, please. All right. So the dividend ETF that I like a lot, it's called PFF. I'm trying to think exactly what it stands for, but it's preferred shares. It's a very established fund, PFF. Look at that. It has a very, very stable holding. I mean, I've been buying that for clients for over 10 years. It's the iShares. It's the iShares preferred stocks. And what is a preferred stock? Let's see. How can I easily explain that? Preferred stocks, so there's different types of stocks. There's preferred stocks, then there's common stocks. Preferred stocks don't trade as easily as common stocks. Most of what you see, hey Remy, most of what you see in the market today is common stocks. So that's a stock anybody can buy. However, preferreds are a bit more exclusive. Preferreds don't have preferreds have a little bit more protection than common stocks. And one day I'll come in and I'll talk about different, I'll talk about the corporate structure in terms of financing, the difference between equity and debt, because there's different types of equity and debt and different type hybrids and things like that. So I'll talk about that. But preferreds, a lot of times banks will issue out preferred shares, and they typically pay an above average dividend. And so I want to say, okay, so yeah, iShares US preferred stocks. So iShares US preferred stocks is trading at $31.34. It's gotten beaten a bit. The yield, the dividend yield is 5.52%, 5.52%. So, but I like that one again because it's bank shares, they're preferreds. The only way those preferreds are ever going anywhere is if the bank literally goes out of business. And as we saw during the Great Recession, banks aren't going out of business. And like we're going to talk about in a minute, we saw the Fed is going to pump much liquidity into the economy to keep the economy afloat. They're not going to let coronavirus, COVID-19 really short circuit the U.S. economy. So, keep that in mind. So I got another, right here it is. I got another one. So the question is, and this is from Guy, what does it mean when you average down your stocks? So I talk a lot about dollar cost averaging, especially for your average everyday investor. And so part of the reason why I suggest people buy now and buy with relatively low amounts, $1 here, $10 there, $20 there, $50 there. It's not going to break your bank. It's not going to cram your lifestyle, but it's like a savings. You can put it away. But unlike a bank, it has a lot greater chance of making more money than a bank account. So when I talk about averaging down, right now, when we see the market, let's use Ford, right? Because everybody knows I've been buying Ford and I've been talking about it. I started buying Ford around 7. Right now, Ford, I saw today was at like 5.45. Now, I thought Ford was a pretty good call at $10. I thought Ford was a pretty good call at $12. So I think it's an even better call now at $6 and $5. Right? It's still a good company, still got plenty of cash. If they do get in trouble, I feel, this is my opinion only, that just like in 2008, 2009, when the government bailed out the auto sector, the government is going to bail out Ford too, because they're not going to let all those jobs go away. It would cripple the U.S. economy. So just like then, I feel like Ford will last. By the way, Ford didn't even need the money during 2008 when it gave them the money, when the U.S. government gave them the money. They made them take the money. A lot of people don't realize that. So, I'm looking at Ford. So now what is Ford at? Let me see. What did it close at today? I didn't get a chance to look at everything today. Ford closed at 5.35. I wish I would have brought some today. I brought some yesterday, but I wish I would have brought some Ford today. So again, when you talk about averaging down, I know I started buying around 8 or 7, and now it's going to be at 6, and now it's at 5. And then my expectation is over the long term, over the next 10 years or so, it'll be at 20 or 25 or 30, right? But I'm buying down to lower what my average basis is. Basically, what if you average all of my stocks, right, and you average the cost of all of my stocks, as I buy lower and lower stocks, or as the stock price goes down in price, I'm getting more shares and I'm getting it for a cheaper price. And so that's what I mean when I say averaging down. I don't know if you saw that on my post that I talked about earlier today. And, a good thing for everybody to research and talk about, and I'll come back and talk about it as well, is dollar cost averaging. Wait a minute. I think I can do that. Bear with me 1 second, everybody. Dollar cost averaging. And I got called out today for my terrible spelling. By the way, my autocorrect on my phone sometimes kills me. So people make fun of me sometimes, and then sometimes I just flat out don't spell right. I get jammed up sometimes. So, but look up dollar cost averaging, and basically what I'm doing when I say I'm averaging down, because I know price is going down. I'm dollar cost averaging in. Again, I'm dollar cost averaging into my position, because overall, nobody can time the market. Nobody can time the market. All right. But I know that stocks are on sale. So I want to be a player in that. And I want to tell y'all, because y'all been seeing me talk a lot about this. I've been talking more and going live more than ever. But I'm going to tell y'all something that happened to me in 2008, 2009, when Bank of America hit about $4.75. I said, that's going to bounce. I said it on radio. I said it a lot of different places. Guess what? I was busy waiting for the market to bottom. I was trying to see if it was going to bottom some more. So instead of just buying some at 4, it was like 4.50 and some change or something like that, Bank of America, I said, I'm going to wait. And guess what I did? I didn't get in until like $8 or $9. So I missed the whole run. I missed a whole run from 450-ish. Don't quote me on that. It was years ago, right? Almost a decade. 450-ish to $9. Even with buying little shares, right? A share here, a share there. That could have set me up, especially a decade ago. Anybody know what Bank of America is now? What it's trading at? Now it's gotten hit. It's gotten hit hard. But Bank of America was up to $32. Right now, Bank of America is trading at $20.51. So even at my $9 buy-in, I'm still profitable. And that's, not trying to be all over the place, but that's something a lot of people are not thinking about. A lot of people are taking profits because we just hit a market all-time high a few weeks ago. And so let me see here. I'm trying to find Bank of America. So Bank of America in April 1st of 2009 was $6.58. Excuse me, December 1st, 2008 was $6.58. And I think that's when I originally called it, and I watched it. It bounced to like 16, and then it fell. It fell to 5.54. I know it hit 4 something intraday at one point. I can't exactly find it. And then from there, it bounced. And I want to say it bounced. It hit. So in December of 2011, it was like $7. In October 1st of 2011, it was $5.44. And I missed it. I missed it all. And so I said, now I'm going to talk about this more. Because again, your dollar invested into a stock will always be better than your dollar invested into a Big Mac at McDonald's or a latte at Starbucks or, any clothing. Y'all saw me talk about Jordans, unless you are a sneaker trader. Any dollar invested in that will do you better. Invested into a stock will do you better than buying a pair of Jordans, a Burger King, McDonald's, Starbucks, any of that. So I say, if we want to talk about wealth and creating wealth, one of the greatest ways of creating wealth is the stock market and buying stocks, because you're buying in the companies and you get to participate in these companies, and you get to participate in these companies who have access to all kinds of capital through investors and through the banks and through the government sometimes. So to me, it's one of the most awesomest place to be. Is awesomest the word, by the way? But, I think y'all get my point. So that's why, now I'm talking more about the markets. I'm talking about all of it. So let me pull up this article that talks about where is that talks about the $1.5 million 1 trillion. It's a big difference. It's a trillion, not a billion. $1 trillion stimulus package that the Fed Reserve rolled out today. They announced today. And essentially why they're doing that, well, you know what? Let me back up. Many people don't understand the Fed. A lot of people like to talk about the Fed's a conspiracy theory. The Fed is controlled and it starts markets and it kills markets and it does all kind of stuff. And they talk about how the Fed was created. Now, just to give everybody a quick history lesson, the United States did not have a central government in the 1800s, back to the times of Civil War. Somebody said today that the Fed Reserve was responsible for starting the Civil War. That is absolutely not a fact. All right. The Fed Reserve came up as a result. Well, let me back up again. I'm sorry. Currency and money was pretty much handled via states. Every state would have their own currency a lot of times in their own bank. If you think about states' rights, if you ever, paid attention to history and social study in school, when they talk about states' rights, a lot of it was talking about currency. A lot of it was talking about states having self-governance. That's why every state has its own level of government. And that's why every state has certain jurisdictions over things. Like today, I'm in Pennsylvania. Governor Wolf, our current governor in PA, ordered a shutdown of a whole school district. Actually of a whole county school district because we've had, quote unquote, coronavirus. And so they have jurisdiction over that. That's not a federal call. So when you talk about, the Fed Reserve and the scheme or whatever you want to call it, there's several books about it. What happened was, I want to say it was like 1913. And it's really weird. I'm not even going to front. It's really weird. There was one senator who was working with the Rothschilds who got this charter passed because many people don't know that the Fed Reserve is actually not a federal agency, but it is federal controlled. The Fed Reserve is federal controlled, but it is its own private institution. All right. Just like Fannie Mae and Freddie Mac to a large degree. And so they created this entity, this Fed, because they recognized that throughout all the states, you would often have a run on the banks. A scare would happen and people would go to the bank and they would take out their money. Sometimes they would take it out in gold. Sometimes they would take it out in cash. There was not one unifying currency during that time. So there wasn't 50 states in the 1800s, but I don't know, let's say 30, whatever it might have been at the time. So you got 30 different states on 30 different things with 30 different ways with the money, running 30 different ways with the money. And so it's hard when you are disunified, right? When you're separate. That's a lesson for anybody that's thinking like that, right? So they said, well, you know what? We're going to unify this. We're going to centralize everything because if we have a stable currency, we can have a more stable nation. Now, to say if the Fed Reserve has done anything goofy or conspiracy theory-esque, you can argue that. I won't participate, but you can argue that. What the Fed does now and how the Fed is owned, it's owned by, there's regional Feds, right? So Philadelphia has a Fed, New York has a Fed, Richmond has a Fed. I want to say Kansas City has a Fed. Just about in just about every major city, every major urban area, there's a Fed. So in those Feds, they help coordinate what's going on with the business operations of each one of those banks. And they make sure the banks have ample liquidity. All right. Hey, DJ Wilson, City Yes, Gabrielle, Mr. Dave Wilson, business bullies in the house. How are y'all? So the banks hold their money with the Fed because remember, we are on a fractional reserve, which means that anytime you put your money in the bank, let's say you put $100 in, The banks actually only are putting about $30 into the Fed Reserve that's actually secured. So when you do all that, people feel something kooky going on. But one of the benefits of the United States economic system is the ability to create leverage. All right. So like I said, the banks are able to take $30, put it away in the Fed in their reserves, and take that other $70 and invest it or give it out in loans and do various things. So that's why the United States economy is one of, if not the best economy on the planet, at least right now. Now, again, a lot of people like to talk about, well, why is the Fed putting money out on the street? The Fed is putting money out on the street because, again, you can still have run on banks. You can still have a lot of goofy, quirky things happen in those markets. Most of our big corporations, most of our biggest employers, they work on credit. Where are they getting their credit from? Oftentimes banks. How are they running their payroll? Oftentimes banks. Hey, Stacey, how you doing? Oftentimes banks. So again, if banks aren't secure, what happens? Can you imagine what would happen if everybody's paycheck didn't hit this coming Friday? Can you imagine the mass hysteria that would be created? I mean, everybody's already overrunning the markets right now, buying 100 loads of toilet paper, 100 loads of sanitizer, 300 loads of, Bounty. People are scared right now. I do feel the mass media is overhyping Corona. Not to say that I don't think it should be taken seriously, but every medical professional I've heard of said to take basic precautionary levels. Wash your hands, right? It's just like anything else with influenza, with the flu. Wash your hands, clean surfaces, cover your nose when you sneeze, or cover your mouth when you sneeze. Don't sneeze into your hand. All basic stuff. But since we keep hearing coronavirus is spreading, we're getting scared. And so that scare is making a run on many of the supermarkets. And the Fed doesn't want that to happen to banks, because a lot of times people want to take their money out of the bank. And again, like I just said, it's fractional. So they don't necessarily always have all of your money that's in your account available. So if you can just imagine, I'll tell you this, right? I've worked on some pretty big campaigns as a campaign treasurer. If you are ordering, let's say $10,000 or more, you have to call the bank and you have to order the money. You have to have them order the money from who? The Fed Reserve. Why? Because they don't keep that much cash in the bank for a lot of good reasons, right? Because banks get robbed, even though in this day and age, it doesn't pay to be a criminal because everything is on camera. So just, keep that in mind. There are a lot of functional reasons for the Fed right now. Is it perfect? No, absolutely not, because the Fed just cut interest rates last week. The Fed just, and I didn't even put this question up, I feel that the Fed should have injected the 1.5 trillion into the markets instead of doing the Treasury cut. I think they were $1 late, $1 too short. But when you look at the overall coordination of this quote unquote outbreak, it's been very janky. If I can say that, if I can take the liberty to say that, the guy that resides on Pennsylvania Avenue is running pretty janky. That I always say politics matters, especially when it comes to money. And this guy has not handled any of these natural disasters and any of these big things well. But people vote for him and they still continue to vote for him. But hey, that's their right. So, the impact, RV, how are you? The impact of, what's being coordinated out of Washington impacts the markets. A big part of this scare and why the markets are failing is because people don't feel that there's much leadership. But, this too shall pass. Anytime, nothing lasts, right? There's a time and a season for everything. So that's why, again, I am encouraging everybody to buy stock now. Buy stock now. Again, it only takes $1, folks, even if you did $1 today. And it's funny, Rosa Vermel's on. So I always say one of my OGs, but one of my OGs was her father. Great guy. And he told me years ago that if you just save $5 every time you get money, you'll have something set aside in an estate. And so, a lot of times we have these conversations about should you pay off your debt before you start investing? Should you start saving before you start investing? I say you can do it all, right? Because again, people go to Starbucks every day. People go to McDonald's every day. People go and buy frivolous things every day. Why not take $5 of that and buy a piece of a stock? And in that way, you have an opportunity to make some money. I'm not saying you should not save, right? Savings is very important. I just talked about savings the other day and how people are saving and how people are saying that savings is stupid. Well, I say they're stupid. Still need savings. Still need cash, right? Right now, if things were to go astray, awry, you should have some cash on hand. Not gold. I know everybody loves gold, but ain't nobody gonna want to trade your gold if the thing really hits the fan, right? They're gonna want food, maybe some gasoline, transportation, ammunition, firearms, shelter, water. That's what they're gonna want. What are they gonna do? What are they going to do with gold? A gold bar or gold coin? You might be able to trade it for a while, but I wouldn't say a long while. So let's see. Now, one of y'all is supposed to remember. I told you I got to do an interview talking about the Fed impact in about 5 minutes. So Terrell said, my apologies, big bro, but this question is totally off the subject. Why are you asking it? But I agree with your conspiracy theory of this virus being, okay, it's not really off subject, of being a big election scheme. So Terrell is my personal friend. We grew up together. He saw what I posted. What I posted was, I said, I have this feeling that this virus is the biggest election rigging scheme ever. Part of me feels that way. Again, I am not trying to invalidate the virus at all. I'm not trying to invalidate any of that. But what I am saying is I do feel the media is overhyping it. Right? People are getting sick. It's spreading like wildfire. But I just feel like if people really show up to the polling booths, things will change. And the current establishment does not want things to change. But we'll see. We'll see. So that wasn't really off topic. That wasn't off topic. Jamar Jordan, how are you, sir? Thank you for joining us. All right, I see Anthony and Chris having at it. So Joanne says, I'm glad I wasn't the only one thinking that. Yeah, I mean, I will say this, though. I have gotten some stuff that people wanted me to share out that I think is propaganda. I want y'all to realize, like I said, we got war going on right now in Iraq, and Iran's potentially behind it. Who knows what that's going to do? We have Russia and Saudi Arabia doing this. I don't know. I call it a battle chicken with oil prices, right? They're continuing to keep up production. Usually when you see massive oil prices drop, the countries around the world tend to drop production in oil, right? It's all economic supply and demand. When you have too much supply, when you have a glut of something, price tends to go down because you want to get rid of it. Typically, if you have a short supply of something, but it's in still high demand, the price goes up because then it goes to the highest bidder. For example, if anybody ever goes to a sporting event at an arena, how much is water? And how much can you buy water on the street? So usually you can buy water on the street for $1, maybe $2. At the stadiums, it's like $5, which is crazy, which is totally crazy. So, okay. All right. So it's 7:52, folks. Does anybody have any other questions? Remember, if you want to see the stock list that I'm building up, my watch list, not continue. What am I saying? People, help me out. If y'all want to see my watch list, just DM me your email. I'll put you on my list, and then I'll send it out to you as I get it together. So again, be mindful about your money. Don't panic. Don't be like the rest of the people. But yeah, be prepared for all things. Be prepared for all things. Could you explain the oil price war between SA and Russia? I just said it. You didn't hear me? So Russia is not reducing oil production. Stacy, send me your email address. So Russia is not reducing oil production. So they're keeping their production of oil high. Saudi Arabia is not reducing their production of oil. So they're helping to keep the price of oil low and depressed. And you know what? I'm glad you asked that, because I forgot a part. The lower oil prices go, the more pressure it puts on U.S. shale. The more pressure is putting on U.S. shale. So what you have to think about is U.S. shale. The U.S. right now makes up a lot of the world's oil. We still buy most of our oil from Canada and Mexico. We don't get the most of our oil from Saudi Arabia and the Middle East. Chris, I was talking about that last night. You missed it. Go back and watch the replay. And so, you got to keep that in mind. So why would Russia not want to reduce the price of oil by lowering their production? Why would Saudi Arabia not want to increase the price of oil by reducing their production? All of their governments are run basically off oil. All of their governments are basically run off the production of oil and the profits they get from oil. I mean, you have all these princes and shahs, and in Russia, you have all these different oligarchs that basically benefit from oil. And so as the price goes up, you get a higher profit margin and you're not depleting your supply as much. But Russia's not doing that. So part of me feels it's a direct assault on the U.S. shale industry to help further destabilize the United States, to further help create mass hysteria in the United States. That's what I think. That's my opinion, along with Russian bots who are very, very active on social media. Again, I've gotten some things that I feel are straight propaganda. I won't repeat them because I don't think it will be responsible to. But I would just say this: keep investing. Make sure y'all protecting and promoting your immune systems, drinking plenty of water, getting plenty of rest, getting exercise, eating some fruits and vegetables. Slow down on some of these meats. And watch out for the GMOs. Again, this isn't a nutrition show, and that's not what I'm here for, nor am I a doctor. But, the saying, let thy food be thy medicine, has been around forever, and it works. People that typically eat well, feel well, do well, look well. All right, so that's what we got to get to. But my time is up. It's now 7:55. None of y'all reminded me of that, right? Y'all supposed to help me out. Kind of friends of y'all. But I'm Kamari Ellis. This is the Finance Rebel Show. I'll be back tomorrow. We're going to talk some more about the markets, the economy, and some taxes. We got to talk taxes. All right, so I'll see y'all all later. Have a great night, everybody.